I made my house more resilient with metal interlocking stone-coated steel roof, and I stuccoed my house. This helps with fire, wind, and hail. But if you live in a tough insurance market that's prone to natural disasters, perhaps you can't get homeowners insurance or it becomes unaffordable. Well, together, let's discover several solutions in this video. Unavailable or unaffordable homeowners insurance, what can you do? We're seeing much higher insurance premiums, or coverage is being canceled, non-renewable, like you can never get it again, or coverage is just not available. Many insurers are not making money the way they want to, and they are highly regulated. And now they have more ways to use high tech for risk pricing. And state regulators have kept rates down during the pandemic, and now those insurers kind of want to catch up. I've seen this firsthand in California. And we also have the aspect of inflation, the high cost to rebuild, climate change, and the whole idea of assessing your climate risk. We'll have a link from the Consumer Financial Protection Bureau on assessing your climate risk. Then we just have disasters. So it's just hard to obtain kind of the gold standard of homeowners insurance, which is full replacement value. You're watching What's Next with Money, a program with smart insights to guide your financial decisions. And then there are issues if you happen to own a second home, like a rental or a seasonal rental. And if it's unoccupied, this is a red flag for many insurers and management companies. We've seen in Florida the large, tall condo buildings now undergoing more inspections, maintenance, reserve requirements, and big assessments, and new mandated regulations, all putting pressure on what is insurable and for what cost. As we've said, in Florida and California, some insurers are leaving or stopped selling policies. And folks have to go to a state risk pool in each of those states, which means less coverage at a higher price. And this is insurance as a last resort. The example is the Citizens Property Insurance Corporation providing property insurance protection to people who are in good faith entitled to obtain coverage through the private market, but they're unable to do so. And it's the cost of housing replacement, supply challenges, mandated mitigation, which is in some ways a good thing, but it raises the costs from government or insurers. And then it's the type of home. And can we tell what kind of construction stands up to threats? Yes, we can, and I'm going to show you several examples of that. And generally, the lack of mitigation, the lack of prevention, and the cost of real effective mitigation, like I did, replacing a wooden roof with a metal interlocking roof. Now, there are mitigation and resiliency planning success stories that can help with getting affordable insurance, and it's working in the market. I did it here at my home, the first interlocking stone-coated steel metal roof. I stuccoed my house with traditional masonry cement stucco and created defensible spaces to combat fire, high winds, and it prevents issues with hail. Now, of course, my insurance premiums through all this went down, but there was out-of-pocket costs to upgrade that kind of defense. Here are three more mitigation examples. Number one, the Deltec Housing Corporation. Their homes are standing up after a hurricane. They're designed to be slightly curved. Some are almost circular, and they're built stronger and elevated. The Big Bend in Florida Hurricane Idalia in 2023, the first hurricane in 125 years in that area, it landed as a Cat 3, intensified rapidly over land to a Cat 4. But those houses of Deltec stood up. Number two, then back in southwestern Florida, there's Babcock Ranch, which had limited damage from Hurricane Ian, which was a high wind disaster that also morphed into a rain flooding disaster. In fact, Ian was the most expensive hurricane in Florida history. Babcock Ranch got some shingles and tree damage, but that's all. Why? Why did they do this? It's good design. They built 30 feet above sea level with environmental and sustainable design. They have an 800 40-acre solar farm. All the utilities are underground, and internet and power stayed on through this disaster. They also design rainfall retention areas, and all the schools are designed to serve as auxiliary shelters. This is mitigation and resiliency at its best, and it combines with nature-based solutions. Yes, it's not on the beach, but proper siting and building codes work, and they actually helped with affordability. Babcock Ranch is affordable compared to many other areas. And then here's a great story. There's real regulatory government hope and help, and it's being demonstrated in our third example in Alabama, coastal Alabama. In fact, Alabama is leading the nation in building resilient roofs and homes. It's called the Fortified Program, where they offer state grants, and it's gold specification that includes sealing roof decks, installing impact-resistant windows and doors, tightly fastening roofs and to walls using hurricane clips. They've built or rebuilt or mitigated over 40,000 such homes. And this represents 80% of the nation's mitigation of this type. And guess what? Homeowners insurance rates are falling. For example, according to the Wall Street Journal, in November 2023, 105-mile-per-hour Cat 2 storm hit Alabama, and 84 fortified gold homes in that coastal region suffered minimal damage, and none had water intrusion. And don't forget the forced blackouts in California, or the non-blackouts and the terrible destruction in Maui, Hawaii area. That hurt all kinds of folks, some with low incomes. They had no generators, many worked from home, and work stopped, so the economy suffered. But now we see some utilities are burying lines. If you're getting value from this video, be sure to hit that subscribe and smash that like button. It moves our content to more folks. There are limited options. If you have a mortgage, you are required to have insurance, and it needs to cover the specific perils or risks in the amounts that meet the lender's financial requirements. Now, if you stop paying for coverage or it expires, the lender is going to impose what is called a force-place insurance policy. This is lender-placed insurance. This kind of insurance protects the lender, not necessarily you, and the costs are high. By law, you're going to get a notice within 45 days before you are charged. Again, these are homeowners with mortgages. And the lenders may also require federal flood insurance. Now, don't drop this if you pay off your mortgage and don't have a mortgage company forcing you to buy it. Without the flood insurance, you could get wiped out and lack the ability to rebuild or even move. Next, keep tabs on the renewal date of your current policy. You may get 1 to 3 months notice from your insurer for a cost increase or non-renewal. And call your insurance company to ask, if this happens, why? And if mitigation, as we've described, some of these ways to make your home more defensible and possibly drive costs down, would be helpful to allow for renewal or maybe a lesser cost increase. Now, here's some more examples of mitigation. Talk about defensible spaces where foliage and wood, etc., is not near the home. A metal roof, hurricane shutters, sump pumps with generators backing them up, the roof brackets and anchors called hurricane clips. And these improvements, I think, can help with resale. And check with your state insurance department to see what companies are operating in your state. And we will have a link to the NAIC. This is the National Association of Insurance Commissioners. And then we have this issue of FAIR. What is FAIR? Many states provide that program of state-based insurance called Fair Access to Insurance Requirements, FAIR, for a basic level of insurance. And these are brought in, like in Florida and California, where a standard policy is not available. And they're trying to plug a competitive commercial gap, or what we might call a failed insurance market. And Florida's Citizens Property Insurance Corporation is an example. Next, always inform your mortgage servicer of any change with an insurance provider or coverage. Now, with some insurance companies not writing policies in certain locations or for more damage-prone housing types, may force some areas to literally, and this is an extreme example, become uninhabitable or become a haven only for expensive custom homes with the rich basically carrying no insurance on their property because they technically can afford it. In some cases, this is what's happening in certain high-end areas. Those that are more wealthy can go uninsured except for liability coverage. And FEMA, in very rare cases, has been known to call for the relocation of disaster-prone neighborhoods or towns where they cannot physically rebuild because of the change of rivers, shorelines, and flooding levels. But those situations are very rare, and it really doesn't happen that often for moderate income Americans. Then there may be system-wide mandated mitigation, the hardening of infrastructures. And we see this in condo or townhome areas where there might be an HOA, and assessments may be made to make those mitigation things happen. There may be more frequent inspections, reserve requirements for improvements for condos and townhomes. And so these are perhaps new financial expectations and pressures beyond the pressures coming from the insurance companies, but they are coming. And utilities are in the act as well, using AI, drones, sensors, remote cameras, and satellite for more mitigation, and in some cases, killing power or regulating power. And some utilities are replacing older above-ground lines or burying lines underground. Here's what's happened recently in the Yosemite Park area just outside the entrance, where PG&E was stringing new lines on new towers to help with mitigation. Then we have the issue of maintaining coverage. If one doesn't carry insurance in disaster strike and you don't have coverage, you still might be on the hook to remove the remains of the house, plus not only the high cost to rebuild if there's no mortgage. You could sell the lot, but you might be charged to remove the debris. Flood insurance is a federal program and required by mortgage companies in key flood-prone areas. And as reported, some seniors and others who pay off their mortgage exercise that risky choice for budget reasons to drop flood coverage. And in some of these cases, these incidents, it's non-recoverable without flood insurance. And why are some people actually doing this? They're actually behind on their mortgage payments. Why? In their budget, their insurance premiums have exploded in size. And that higher cost has a factor in affordability for purchasing and even qualifying for new mortgages. So here's some action steps that you can take. First, you can get ahead of these pressures with knowledge of the state-based risk pools, the FAIR coverages we talked about. Next, get expert advice from insurance risk managers. Check out the Insurance Information Institute, and we'll have a link. And there may be recommended mitigation to lower your premiums, lower the rate of increase if the insurance is still being offered. And again, mitigation can help a lot with resale plus peace of mind. If insurance is not being offered by one carrier, a robust mitigated property could have a better chance of getting coverage from another carrier. And then, in extreme cases, we may have to look at the trade-off of relocating. Basically what I call geographic self-mitigation, based on your affordability, cash reserves, family priorities, and housing or location goals. In rare cases, if you are in a vulnerable area that cannot be mitigated, FEMA, with other partner groups or state funding, might have to do an area relocation or a buyout settlement where rebuilding can't take place. Flood-prone areas, landslide-prone areas, beach erosion areas. And of course, make a home inventory, both inside and out, and see our popular disaster preparation and recovery videos to help you. So be sure to hit that subscribe and smash that like button. And thanks for watching. I'm Brent Neiser, looking to see you next time on What's Next with Money.